Well, hello and welcome to another in our series of Choice Words videos where we get to speak to key decision makers in the worlds of UK fund research, UK fund selection. I'm Julian Marr, I'm Editorial Director of Wealthwise Media, and today I'm delighted to be talking to Paul Angell, who is Head of Investment Research at AJ Hello, Paul.
Hello, Julian.
Kick on, get into the nitty-gritty straight away. What excites you most about the current investment outlook? What gives you pause for thought?
Yes, I think, arguably it's a bit of a cop-out answer, but diversification. So we think there's lots of great asset classes out there which offer good prospective returns over the long term for an acceptable level of risk. So we continue to think as you blend those together within portfolios, there's a good investment outlook ahead.
Very neat. On the other side,
Concerns, sorry. So I suppose concerns is the opposite to diversification then, which is concentration, which lots of people are talking about. The US stock market being 70% of global indices or thereabouts. You've got the Mag 7 up around 25-30% of global markets. That's just 7 companies, 25-30% of global markets. And then also you've got things like meme stocks and Bitcoin, cryptocurrency. There's lots of areas of the market that people can put a lot of their savings, wealth into, and there's going to be a lot of volatility without that diversification. So that's something that we're concerned about. We do see ways to get around that through some allocations to more defensive sectors and also an equal weight allocation within the US rather than kind of a market cap weighted approach entirely. So yeah, that's kind of what I'd say to that.
No, it's a great start, not a cop-out at all. Let's focus in a bit now, though. In terms of individual assets, what are the key aspects you look for on the positive side, and what do you consider to be red flags?
Yeah, so I suppose when we're looking for assets or funds, so we are fund selectors within my team, and we're looking for, firstly, we're looking for the fit to what we need. Does it have, particularly on the passive side, does it have the right benchmark? Also, we have a investment philosophy mantra around simple, low-cost, transparent investing. So the cost is important as well. And then I think from there, it's kind of, right, is the fit right? How's the caliber of the investment proposition? And by caliber, we're thinking about what's the investment philosophy, what are the inefficiencies that the fund manager or the business see within markets, and how are they going to exploit them within their investment process? What's the makeup of the team? How big is it? What experience have they had at successfully executing that investment philosophy through time? That kind of nudges therefore into performance. Also, we also do think about the firm level as well in terms of how set up is this business to commit to the UK market over the long term, particularly within passives. Is it a big provider who's profitable, but then also an active? Some of these boutiques they can wax and wane in terms of their overall assets under management, and some of the boutiques don't have a big corporate backer behind them, and actually when you see flows start to tail off across the business, then you've really got to be asking questions at a fund level as well. So that would be a red flag. And then another red flag is kind of unexpected performance or unexpected positioning. Going back to that, I'm not sure I made the point, but the point around investment styles and philosophy. We spoke about philosophy. Is it a value manager, right? So are they sticking to that philosophy? Because we'll typically be blending a value manager with a growth manager. So we need the various parts of our portfolios, and therefore our fund picks to be playing the right roles for what we brought them in for. Yeah,
and so little certainty in what we're doing at the moment. Actually, the least thing is the fund managers to stick to what they said they will.
Yeah.
Great stuff. Moving to alternatives now, to what degree do you and AJ Bell in general think professional investors should be dealing with it with looking beyond traditional investments, cash, equities, bonds?
Yeah.
And towards what?
Yes, that's a really timely question for us at the moment, actually. So I mentioned earlier that our sort of North Star as an investments business is simple, low cost and transparent investing. Alternative asset classes are typically not simple. They're typically not low cost, and they're often not transparent. So it's not a great fit for our core business. And when I talk about our core business, I'm talking about our unitized funds that we sell a lot to the mass market, so direct to retail, and are very popular on our own retail platform. And then also within our core MPS, we're really in those propositions trying to blend asset classes that kind of fit within that investment philosophy that I've outlined. So it's the traditional asset classes of fixed income and the various components of fixed income, equities, various regional allocations, we can do some sectors too, and then cash as well. However, we do see a role that alternatives can play to improve diversification within some portfolios. So we have another part of our business where we partner with advice firms, and within that part of and the partnership there is that we're running their investment portfolios for them on behalf of their end clients, but they have some say into to how the portfolios are run. And within that part of our business, we are having the conversations with those partner clients saying, look, there are some asset classes, alternative asset classes out there that we've identified we do think can be additive within investment portfolios. Now, they don't necessarily fit within the simple, low-cost, transparent nature of our core proposition, but we are starting to use those. So what are they? Well, Active Long Short, I think, is very good in terms of being beta neutral, so you don't have that market exposure. Also, you are able to pick up the return of cash due to the structure of those funds. And then some other areas we're looking at managed futures. We think that there's some particularly good, a good absence of correlation, particularly in down markets, as those strategies can get the right side of the trends, even down trends. And then event driven, we think that there's some alpha that can be realised there within M&A transactions, and that's kind of separate to market beta. And then finally commodities as well. So there are asset classes that we think can work, but we're not putting it into our core models. We're probably going to end up with kind of 5, 6, 7% allocations to the whole bucket, and then make up with some of those funds underneath, and hopefully they'll play an important role to diversify returns if we do come into choppier waters within markets.
That's very interesting, thank you. Let's move on to client comms. I know from experience that your press communications is pretty good, pretty fulsome. I imagine it's the same on the client side, but what is your approach at AJ Bell? And as a sort of sub-question to that, I always talk about this idea of attracting the right type of client, which sounds a bit judgmental, but what I mean is that someone who's going to stick with you through the journey, not get spooked, not get out too early, and then miss out on therefore sort of the benefits of AJ Bell's wisdom in guiding you to the end of the road.
Yes, I think so. For me, around communications, it's all about clarity. So investment markets are complex. So an important role for investment professionals is to bring some clarity to proceedings for whether that be our advice clients through those partnerships that I spoke about, but also our model portfolio proposition, or the direct to retail customers that we have many of on our thousands and thousands on our platform. So we're really trying to communicate as clearly as possible some of these complex, the complex world of investing, really. So that's kind of what I'm always trying to come back to is am I being as clear as possible in what I'm trying to communicate here? And yeah, that typically works well for us, I think. But yeah, we do a lot beyond just the investment team within AJ Bell in terms of communication and press and PR stuff. So that we've got a lot of guys who are working a lot on
it's a big
tax affairs and everything else besides not just markets, personal finance.
Yeah, the pensions mob, yes, of course.
Yeah.
Excellent, thank you for that. More personal question: what was your path into investment and in an alternative universe? What do you think you'd be doing if you hadn't taken that path?
Okay, so my path into investments was that I studied economics at A level, and just almost immediately thought, yeah, I like this. It's kind of I'd grown up within society and bought sweets from a corner shop, and sort of to then have a framework put around that in terms of that was a businessman who I was interacting with as a consumer, and he could have set his prices higher or lower, and then I might have bought more sweets if he'd gone lower, less sweets if he'd gone higher because I'm budget constrained, and then his profits would change on the back of that. And I suppose the framework that economics gave me to kind of understand how the world, well, at least the market, like the free market operated around me was something I enjoyed right from the off, and then informed my decision of studying economics at university. And I think I was always heading back towards the city, and so financial services was kind of the obvious area and something that I enjoyed. And then I think the thing that stayed present from that first day in studying economics A level till now is, you're always learning. We've just enjoyed a 2-day conference courtesy of Wealthwise, and learning every session, and that's great to kind of build out that spider's web of financial markets and who's doing what and why they're doing that and what's happening at the moment. And so that still fascinates me, and then helping people as well. I think within financial services we do. I find it a shame when in financial services we forget that we are helping people sometimes. We're helping people save towards a retirement or towards that first house purchase, and do more than save, actually invest to enjoy some capital growth along the way. So I kind of do see the purpose behind the role as well. And then alternative universe, what would I be doing?
Running a sweet shop?
Well, I'd eat all the sweets, and there wouldn't be any profit.
Okay.
Actually, I'm being quite good. I'm on no sugar November, so I'm doing all right on that front at the moment. I would be a pastor. I love my Christian faith. I think it's so good for people, and so I would be ploughing that furrow.
Fair enough. And thank you very much for your plug for the Wealthwise events. Please do check your calendars for the 2026 Wealth Forums and other, all coming to a good venue near you. There, I can take these advantages where I can. Excellent. I'm not asking you for repentance there in this case, but what was the biggest investment mistake you've ever made, and what did you learn from it? We talked about learning, so...
So I think, so I've made a few mistakes in my career. In terms of investment mistake, I think the biggest was within emerging market debt, and
Interesting.
I think where we've been sort of 2018 sort of time, 17 maybe, and getting sold on the high yield story, and forgetting that actually it's high yield for a good reason, and the strategy I'm thinking of actually was kind of short dated, so it didn't have all the duration risk, which is good. And it had this kind of 10% plus yield, which I like some of that.
Yeah.
And forgetting that actually within emerging markets you've got some really some often wild credits within there. So there was Argentina defaults, there was everything that happened in Lebanon around that time. There was Venezuela defaulting on its debt, and actually, just continually, the fund seemed to continue hit landmines out there in the market, and really suffered for it. And actually, what I went into on the basis I thought this was quite a safe, stable yield investment, I came out of having lost a fair bit of capital, and just going back to my first point around diversification. Relearning the lesson around diversification, particularly in emerging markets. Whenever I go into emerging market debts now, I like lots and lots of issuers. I don't like. There are some funds out there which might have 10 or 11 or 12 countries under the bonnet, and that's a lot of credit risk in emerging markets. So I like lots of countries, but also lots of corporates in there. and I like the hard currency debt and the local currency debt. So I like a kind of blended exposure within emerging markets, which has kind of been my core EM exposure through the businesses I've worked with, and I've learned that diversification lesson the hard way.
No, very good. Moving on to everyone's favourite question in choice words. Outside of work, what's the strangest thing you've ever seen or done?
I was thinking about this, and I think it was hitting an air pocket on the way back from the US when I was 6. It was 1995, and I did some ChatGPTing on this last night just to make sure, because I've always run with the story for 30 years, and I was kind of now that I'm going public with it, I was trying to make I was trying to check some of the facts, and even learning what an air pocket was. But the experience was such that we're flying along at 30,000 feet or whatever, and then suddenly the plane dropped 10,000 feet. Now I was looking back last night, and ChatGPT was doubtful that it dropped 10,000 feet. But the chat from the pilot at the time he'd done 35 years of flying, and that was the worst incident he ever had. So let's stick with the 10,000 feet. And so what was it? So the experience was, remarkable in the sense that everyone presumed they were dying, or I think it happened so quickly, but I think everyone presumed they were dying because as the plane's dropping, you had people getting on their knees in the aisle and like calling out, and then as the plane and this is what I was learning last night. So an air pocket is just where there's different movements of air, and so the plane dropped like that. And then it's when the plane then stabilizes that, because everything's been in free fall, the items within the plane remain in free fall, but the plane kind of stops. Anyway, so at that point, people who hadn't been wearing the seat belts, I think these people in the aisles must have got back on, because we then got back into their chairs and seatbelted, because we then saw, because the seatbelt signs came on and all that, we then saw some people who didn't have their seatbelts on just go straight up, and neck injuries and things. Fortunately, nobody died. My elder brother, who was kind of 14, 15 at the time, he slept through the whole thing. Pillows fell on him and things like that. But I think that was quite a, you just never think that's going to happen to you when you're in a plane. So that was probably, that's what I could think of in terms of the.
I think that's an excellent one, and fact checks as well. I mean, I actually couldn't answer.
Yeah, I'm sure I butchered some of those facts. But
no, that's more than enough to go with. Well done. I like that. Quicker question now. So what advice you would have given yourself, or would you like to have received on your first day at work in the business?
Yeah, I think it's to engage with people in the industry. I think there's a lot of brilliant people in the industry within the investment side, distribution, media, operations, and everyone is trying to work towards the same goal of improving client outcomes. And so speak to people, find out what they do, how they fit into that infrastructure, and that can really turbocharge. That certainly turbocharge my learning, and that would be what I'd be telling me coming through. And also, it's great to get to know people, and it makes a much more enjoyable time if you've got people around you in the industry who you genuinely like getting on with, and can help one another out when you need it with whatever.
No, an interesting business full of interesting people.
Yeah, that's probably another way to put it.
Yeah. Oh no, I'm not paraphrasing. Critiquing my interviewees as I go through, that would be a quick way to know more interviewees. 2 more questions now. One back on business really. What do you see as the best and worst case scenarios for the future of wealth in the UK, or wealth management in the UK?
Yeah, I think the best case from my perspective is that we continue to democratise access to wealth management or asset management, and I think there's some good things afoot with that, with kind of the new targeted support legislation, and perhaps even some ISA simplification, taking that kind of separate cash ISA and stock and shares ISA, put them into one. That's something that at AJ Bell we kind of really believe in. Would help get more people into investment. So that's the best case from my perspective, is get more people, increase the investing rate across the nation. And then the worst case is, I suppose, is kind of the inverse of that. Is that not happening? Asset management or wealth management services continue to be the preserve of the wealthy, and yeah, that would be a disappointing outcome. When hopefully we can, there's lots of people out there. There's lots of pools of assets that we can, as an industry, help to manage and grow, and do more good for our society.
No, I like your general theme of investment as a force for good. This is it is. Got to keep doing that, shouting that out. Final question. We call this choice words because what you do for a living, making choices. But now we're going to ask you for 2 personal recommendations. One would be for a book. It can be investment related, doesn't have to be. And the other one is a free hit. Just a general recommendation you think the audience might be interested in.
Yeah. So in terms of book, I'll stick in the industry. The best page turner I read has been Too Big to Fail by Andrew Ross Sorkin, and that is a brilliant account of the financial crisis and a period of excess certainly within the banking sector. And what he was able to do as a journalist was go and interview all the big CEOs, all the big names who are involved with the banks and the government, actually, in terms of some of the bailouts, etc., that we saw. And then he kind of it's a brilliant book, as you kind of move through the period with him, and you're kind of taken into the boardroom as you see what the decisions were and what the banks were being presented with, and where the areas of excess were in subprime, etc. And I think that's a great book to kind of, because it's a page turner, it's interesting. It's that was a bad time for the economy, so that's a great one to kind of remember how bad things can go when risk starts not being managed properly.
Sure.
And then wider recommendation is, I was going to say running, but just now I've got a different idea.
Okay, interesting.
Running's good because it's everyone knows the benefits of running, so we should all, if we can physically do it, we should do it more. And I really enjoy running. The other thing would be Angell. So I'm fortunate to travel a bit, particularly when I'm sort of post-university, that sort of age. And 2 places in the world left me kind of, 2 man-made places kind of left me with my jaw physically open for the entire experience of being there. And one of them was the Great Wall of China, just north of Beijing, and the other one was Angkor Wat, which is a series of temples. Well, it's the area of an ancient. I didn't fact check this, but this is what I remember. Area of an ancient civilization. Yep. In Cambodia. And it's just the access I don't know if it's still like this. I went 13 years ago or so, but the access you get there, it's just phenomenal. And you're looking at these ancient towers, and you get to go right up, and you get to climb them with no kind of like safety or anything, and everything's kind of immaculately kind of designed, and the artistry on all the walls and the brickwork, etc. And it's a remarkable experience, which I really enjoyed. And I was hopeful that when I went to see the Taj Mahal in India, I'd get the same, but I didn't.
Okay.
So I would recommend.
No, that's great. Just make sure, I think with Angkor Wat, you need the right guide to take you to this little bit off the beaten track, or give you the impression that you're off the beaten track. I think maybe that's it. Maybe
I didn't even have a guide. I was just kind of like, which part of the wonder of it for me was kind of just being able to go off and then explore it myself. And I actually just left the friends I was with and just kind of soaked it up for 4 or 5 hours. But yeah, if you're ever in that neck of the woods, then definitely would highly recommend a trip there.
And second that for sure. Those are great word choices, Paul. In fact, a wonderful conversation too. It's been really interesting. Thank you so much.
Thank you, Julian.
And thank you very much for watching. Please look out for further choice words videos as they are published.